You are a big advocate of dividend and growth investing. For our listeners who are new to that concept, what does it mean and why do you believe in this strategy?
Okay, this strategy is actually a simple one. And I'll use a simple analogy
Okay.
whereby if you plant a seed, let's use the ones that have trees as well. So if you plant a seed, you expect the tree to grow up. That is number one. And thereafter, you expect it to give you fruits, right? So in this case, that seed is your money that you're investing. And the growth aspect is that tree. The dividend is the fruit. Some trees don't yield any fruit, but they grow. They grow, they cover, they provide shade and things like that.
Hello, welcome to the Nigerian Investors Podcast, the unofficial podcast that tracks and reports on the activities of the Nigerian boss. My name is Moody, and with my colleague IE, we will be hosting this podcast. TNI Podcast is dedicated to stimulating a renewed enthusiasm among the general population with regard to the activities of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see that many Nigerians from all walks of life, both at home and in the diasporas, become active participants on the floor of the Nigerian Stock Exchange. Before we go further, we would like to place on record TNI Podcast is solely for educational purposes and not a replacement for professional financial advice. Let's begin. Welcome back to another enlightening episode of the Nigerian Investor Podcast, the show where we explore the full spectrum of Nigeria's capital markets, spotlight smart money strategies, and empower everyday investor to build wealth with clarity and confidence. Today's guest is someone who brings a rare blend of global experience, deep expertise, and an educator's heart to the world of investing. He is a fellow chartered accountant, a certified fraud examiner, and holds a degree in accounting from Obafemi Awolowo University, OAU. His professional journey spans respected organizations from Globacom in Nigeria to BNY Mellon in the United States. But beyond his resume, he is a passionate advocate for dividend and growth investing and a firm believer in simplifying financial education for everyone. He is the author of the newly released book, AI-Powered Finance, Your Guide to a Smarter Financial Future, where he explores how artificial intelligence can revolutionize how we manage money and make investment decisions. You can grab your copy on Amazon. Highly recommended. Whether he's teaching red flags in financial statements, investing in growth stocks, or sharing insights on his plugin portal on YouTube channel, he's committed to helping Nigerians, both home and abroad, to build a financially secured future. Mr. Babatunde Aloba, it is a pleasure to have you on the Nigerian Investor. Welcome to the show.
Thank you so much. I really appreciate it. And thank you for this opportunity to join as well and do what we do, educate investors on various topics, both in Nigeria and the US about investing. Thank you so much. I really appreciate this opportunity.
Thank you for being on this podcast. Can you briefly walk us through your professional journey from OAU to becoming a chartered accountant and fraud examiner working across Nigeria and the US?
Oh yes. It's been a long journey. That's one thing I would say, and it's been a tough journey as well. As you know, there's hardly anybody who don't have their stories.
Yes.
I qualified as a chartered accountant back in when I was in part 3 of OAU before finishing my studies.
Wow.
It was actually I used ICANN to gain entry into part 2 in accounting. So I had to juggle doing both ICANN and my BSc as well at the
Wow.
same time. So I was fortunate to be able to complete the program before finishing, and thereafter we went for NYSC. Then I joined Abaxosa as an audit trainee, and I wasn't there for too long before joining Globalcom as one of their finance associates. At Globalcom, I worked in treasury. Then I moved to the international side of the business where we deal with, it's called Glow Gateway, where it deals majorly with international carriers. From there, I moved to the US in 2013, and I was with Bank of New York Mellon. I did some other jobs as well before joining Bank of New York Mellon. And from there, I joined on LLP as a senior associate, and currently with Conresnick as a senior consultant. So that's just been my journey from OAU to this point.
That's impressive. Very, very impressive. Your resume is packed with a lot of achievements, and to get someone like you trying to help the average Nigerian with financial management, financial education is really a plus. Most people in your position might probably be too busy to have time for doing any altruistic work, trying to help the common Nigerian. Thank you so much for what you do, and we are so blessed to have you today. Moving on to the next question. With your global work experience, what differences stand out to you between our Nigerians and Americans approach investing and financial literacy?
I would say there is really a thin line between the people we have here in the US and the average Nigerian as well. But we have the commonalities, and then we have a little bit of things that separates them. And what I mean by that is here, there are two things that are required for your retirement. One is the social security, and that's a situation whereby they draw something from your paycheck to your social security. So when you get to the retirement age, you get paid back some of those money. And the second thing is your 401k, which is the equivalent of our own retirement plan that we have in our own pension that we have in Nigeria.
Mm-hmm.
So in terms of those two, one way or the other, something is coming out of a paycheck. But now the difference here in the States is that we do most things on credit. They believe so much on that. They can lend you money to buy a home, lend you money to buy a car, and even now they can lend you money to buy everyday food. So one way or the other, you need to get yourself educated here. But back home in Nigeria, if you work in a menial job, you might not even know anything called pension, because it's not a requirement. It's not something that is compulsory. Even here, they have the Roth IRA, which is separate. If you're not doing the regular, not the regular job, so to say, there are jobs that are not compulsory for them to pay you 401k. So in that case, there's opportunity for you to open your own Roth IRA and save money in there. So the difference is just not, I won't say too much, but then here there's some things that will compel you to go into the market to get yourself educated financially. So that literacy, that gap is still there for both, I would say.
Interesting. Thank you for that. So let's move on to investing now. You are a big advocate of dividend and growth investing. For our listeners who are new to that concept, what does it mean, and why do you believe in this strategy?
Okay, this strategy is actually a simple one, and I'll use a simple analogy
Okay.
whereby if you plant a seed, let's use the ones that have trees as well. So if you plant a seed, you expect the tree to grow up. That is number one, and thereafter you expect it to, give you fruits, right?
Mm-hmm.
So in this case, that seed is your money that you're investing, and the growth aspect is that tree. The dividend is the fruit. Some trees don't yield any fruit, but they grow. They grow. They cover. They provide shade and things like that. So that's just my simple analogy. When you invest, you expect it to grow, and you expect to have dividend is extra. Just so you know, dividend is extra. Some companies, even though they are paying dividends, sometimes, uh, given the economic situation, they do not pay dividend. So you want to buy the philosophy is to buy a stock cheap and then sell it when the price goes up. The dividend mostly is extras. The way I do it, I do not time the market. If I have 100% to invest in a stock, I break it down into three lots. I buy the first one 50%. I wait for it to drop because I know events will always come up where stocks will come down. So I wait for those events. I'm not timing the market. I'm not waiting for it to crash. No, I'm just saying if it comes down, I buy another 30%, and the remaining 20%, if it goes up or down, I just buy the remaining 20%. So that's the way I go about doing my investment. And I believe in when you look at a company, you expect it to grow. Most people will expect that, but sometimes it doesn't always go that way. And that's where your research comes in.
Thank you so much for that elucidation. How do you now personally evaluate a company before adding it to your portfolio? What red flags do you look out for in financial statements?
But that's a good question. The things I look for are just very few and simple. I look for growth pipeline. Is the stock, does it have any growth pipeline? Are they bringing out new products? Those are the things I look for. I look for valuation. Is it cheaply valued? I have my guys on Twitter as well who do a lot of fundamental analysis on stocks. And I also follow them. I also check what they are looking at, if it aligns with what I'm looking at. Does it pay dividend? If it does, fine. If it doesn't, there are some that don't, that we still invest in because we believe in their growth. We look at management as well. If it's managers that they are controversial, they are always causing issues, they are always having issues with the board, we try to avoid those type of companies. It's very paramount that you look at the management of a company before investing. We also look at insiders as well. Are people buying insiders, directors, people that are affiliated to the company? Are they buying or are they selling? If they are selling, it means they have some more information that I don't have that makes them to sell. So if insiders are buying, it's a good thing. If they are selling, we usually frown at that. And hey, why are they selling? But of course, there are situations where they are compelled to sell. There are situations where we also look at it. If I bought it for 10 naira and the stock is now selling for 200, I would want to take profit as well, even as an insider. The case in point is for Facebook, where you see Zuckerberg always selling. You never see him buy. If you check their financials, he's always the one selling all the time. So in this case, we know he is making a lot of profit. There's no reason he's holding. So he might just want to sell. So in that case, we can still buy that type of company because we know he has a lot of shares. He's just selling some part of it. So those are the things that we look at. For red flags, we look at if corporate governance is not part of what they are doing day in, day out. And that's why you see us look at their reports from time to time. Their quarterly reports, we try to check that, look at what's going on. Is revenue falling? If it's falling, then it means they have issues. But if they are telling us this is the reason why our revenue is falling, maybe tariffs, that's why we are not able to project a higher revenue, then we can still say, okay, let's still invest. Let's see what what the market says about that. If there's no corporate governance, we also frown at that. We've had issues where uh, uh, the board members are fighting each other or are bickering, or someone borrows money, they are not paying it back. So those type of issues are things that are red flags that you need to look at. Another thing is if they are not, no new products in the pipeline, they are not telling us what they are doing for the future, then we need to start asking questions. I mean, what do you have in stock for us? If you are bringing a new product, we know you have to sell it. And in that case, you are making more money. The stock price will definitely go up. Another thing we look at is late filings or delays. Most times it's just in the back of our mind that maybe they want to cook the books. But that might not be the case. For insurance companies, it's typical that most of them delay because they also have regulatory bodies that they report to. So sometimes we see clashes in between. They want to satisfy the SEC and they also want to satisfy NICOM. But in such cases, there are frictions where they cannot meet both deadlines at the same time. So sometimes it's understandable when they delay and when they provide a reason for the delay. I've seen situations where some would tell you we are delaying our reports, but there's no clear line to what is next. When are you giving us that report? That's number one. Why is it delayed? You won't even see it in their in what they put out there. So those are some of the red flags that we look at. We also look at earnings as well, like I mentioned. Is your earnings, is it dropping or is it going up? Your taxes, of course, taxes, you have to pay taxes. Taxes has to go up. If you're paying more taxes, it means you are making more revenue. So those are the things we look for. We look at retention as well. Are they retaining profit? Are they paying dividend? If they are not, it's also fine. Case in point for dividend is MTN. I remember, I think sometime last year or thereabout, or even this year, they came out and said, we are not paying dividend. They are retaining earnings. So in this case, we know MTN is a good company. They have so many products in their pipeline. They can delve into finance. They have licenses for some of those things. So in this case, investors will look at selling because I know most Nigerian investors, they want dividend. So when they are selling, we are going in to buy because we know MTN will surely bounce back to that point where they can pay dividend. So in this case, the parameters are there, but you don't have to be rigid with those parameters. You have to be a bit flexible. Like I've given an example of late filing. If it's late filing, if they are telling us it's because of NICOM, we'll give you the results on this day, then we can still keep that type of company in our portfolio. If it's dividend, if they are telling us we are not paying dividend because of this and this, we are retaining earnings, yes, we can still keep that type of company in our portfolio. But you have to look at the red flags. You have to look at the good side as well.
Thank you so much for that. That's a lot to unpack, but I believe our listeners, they will be able to dissect what you just said. Moving on, many investors, they chase quick returns. How do you stay focused on long-term value, especially in a volatile market like Nigeria's?
Oh, yes. That's another good question because you need to, there's a psychology to investing. That's just the truth. We invest sometimes based on sentiments, and that is what drives the market. Here in the US, I've seen stocks that they do badly in their returns. When they give their quarterly returns, the results are bad. But then they give projections that are good. So in such case, you would expect an inverse of the reaction. Like people should be selling that type of stock. But I've seen situations where people are rushing to buy it, even with a bad result. So in this case, it's just about you doing your research. Like I've said before, do your research before even investing. That's what separates you in times of volatility. Yes, we all want that return. It still happens to me as well as a Nigerian, even here investing. I want that quick return. I want to put in 10 naira and get 100 naira in 2 days or 3 days. It's just a natural thing for human beings to do. So in this case, you would want to do your research about that company, know what the company is all about. read their financials, join their AGM. This is how you educate yourself as well. Listen to AGM of different companies, even if you don't have shares in them. Listen to it. You will pick one or two things from what the company is putting out, what the managers are saying. Here as well, I've seen people do the hot thing in terms of finding information. I had a friend who went on Glassdoor to look at what the employees are saying about that company. And he invested based solely on that, because everyone's saying good things about, oh, the CEO is always commending us, is always up to date, is always informing us that they are increasing pay, things are going on. So in this type of scenario, you are doing your research, and that's what keeps you in the market during volatility. When MTN came out and said, we are not paying dividend, I'm sure many of my friends who are after their dividends will be like, well, I'm selling. And people did sell. MTN prices dropped a whole lot. And that's when we went into the market and buy, because we do technical analysis, we do fundamental. We go through the financials. Why is MTN not paying dividend at this point in time? Oh, they said, oh, we want to retain earnings to invest more. We want to use the funds that we are not paying out this moment to do this and that. That is why we kept hold of that. Another situation was Fidelity most recently, where they had court issues, and people were freaked out that, hey, I'm going to sell all my stocks in Fidelity because I don't think they can pay that huge amount, because it runs in the billions. But if you've done your research, if you know what is going on, do your research, check the financials. If the court ruling is final and they have to pay that amount, how does it affect their balance sheet? That is the first thing you need to look at. So in this situation, you can see, oh, Fidelity can make that payment and they will be fine. So, and also we see insiders coming in a little bit after that pronouncement. Insiders are buying a whole lot. It brings confidence, and that's what keeps you in a stock. Let's say you bought at 30 naira and it drops to 17, like I think it did. In this situation, you can buy more, or you can keep hold of your stocks. It will get back to that 30, your entry point. It will get back to that, because the fundamentals are backing it. Your research is backing it. So in terms of volatility, you are not a day trader. You are not going in and out. You hear Fidelity is having problems. It drops to 17, you sell. Some people are buying at that point, and it goes back to 25. And you're now trying to chase and buy again, because now you believe in them. So in times of volatility, do your research, be sure of what you're investing in, and you'll be fine irrespective of what comes.
That's interesting. Let's just switch it to your book, The AI Powered Finance. What inspired you to write it?
I would say what inspired me, it's a personal situation as well as a global situation, whereby you have an opportunity to do something better than it already is. Most times here, when we get our bank statements, we try to go through it manually and start ticking, oh, I bought this. Why did I even buy this item? I shouldn't have. Or, oh, this item is just sitting there. Maybe I return them. So you try to go through your bank statement manually and try to tick and tie and find out where you are spending more or where you need less. But with the advent of AI, you have the opportunity to put in some few prompts and it will generate anything that you need. That was what prompted me to write the book. I've seen people rightly question, why use AI? Why can't you just do it the way you've been doing it? Number one, it makes your work faster and it makes it smarter. So why not just use it to your advantage? If you can get to a place faster, would you choose the slower route instead of the faster route? You would want to get there early, so you would want to use the faster route. So we saw the advent of internet. People never generally accepted it, but we see gradually how people came to admit that, hey, we should have started using internet way back. We should have been using it for advantage. And that is what brought companies like Amazon into the front for, and Microsoft, the big companies. they all took advantage of the internet, and that is what brought about their expansion. So the book focuses mainly on three aspects of finance in general. That is paying off your debt. You can use prompts to see which one you should pay off faster. You can use prompts also for savings, which is another aspect of investing. And of course, we've seen people use AI to invest these days. So those three aspects are what we cover. This approach that the book preaches is just simple. And that is with a caveat because, like most people have been saying, we don't know where those data are being stored. So you can just take your bank statement, convert it to an Excel, remove anything you think is personal data like your bank account, your address, those type of things, remove them from the generated Excel sheet, upload into AI, put in some prompts that we have in there from the book and generate those prompts. Use the results to pay off your debt, use the result to help you in savings, use the result to help you in investing. Those are the three things that we put in together in that book.
Thank you. From the book that you wrote on AI, how exactly do you see AI transforming personal finance and investing? Can you give us a practical example of how an average Nigerian can benefit?
Yes, sure. Like I said, AI is new and everybody is trying to wrap their head around it. And that is why we see a bit of fear from some people. How can you use AI to your advantage? Yes. Like I said earlier, convert your bank statement to Excel, remove personal details, and then put in those prompts, generate the idea that you need. Maybe you find out you are paying too much for your car note. Put it in. Find out how can I save more from this. There are some times here where you can call some of the banks and request for a reduced interest rate. They'll give it to you. If you don't ask, you will never know. And that is why we have AI to look at those things for you. Check where I can get a lower interest rate. Sometimes you can move a loan. You can move it from one bank to another with a cheaper interest rate. So what they are just saying is Bank A will pay Bank B off, and then you pay a lower interest rate with Bank A. So those are smarter ways to use AI to your advantage. You don't need to be afraid of it. You don't need to fear it. But the caveat, like I said, AI is not yet perfect. The upgrades you can see coming, Google is always coming up with, we've improved on this. There's this AI you can use for videos. There's this AI you can use for this and that. So these are things you need to start looking at.
The next question is about the fears that people have concerning AI. So some people fear AI will replace financial professionals. You're a financial professional. What is your take on that? Is AI here to assist or to disrupt?
AI will assist and also disrupt, because I've seen people build stuff with AI. There are tools out there that is just one prompt and it will build an entire app that is ready for both iOS and Android. So we have to adopt it. Like I said, the advent of internet, people were like, what is the internet going to do? What is it going to change? I could remember when I just got to the US, we would print out Google Map. Print it out on a physical paper and start going about where we are going. But now you have it on your phone. You can just plug it in and go anywhere you want to go. The usage would definitely come with when people realize that this is going to assist us. Of course, it will reduce some of the things that we do as accountants, as financial analysts. We can download a statement, upload it into AI, and let it generate whatever format we want, instead of typing it manually, instead of the ways we've already been doing it currently. So I would say the fear is there, and it is right for people to fear it. That is normal. Internet wasn't accepted. I keep saying it. It wasn't accepted initially, but with time, people gravitated towards it, started using it to their advantage. It's going to be the same thing with artificial intelligence. The fear also that I've seen is uh, now that we have AI, we are seeing a thinner line between reality and what is fake. You have to look twice or even three times to figure out, is this thing actually real or is it fake? So we still need a lot of work to be done with AI as well in terms of demarcating what is real and what is fake, what is AI generated and what is in the actual picture. So yes, is normal for people to fear, but I would say adopt it, use it to change the way you do your normal regular day job. And that is what will set you apart from others in the game in the future.
Thank you for that. Interesting. Now, I think we've asked a lot of questions about AI. I don't want many people to be too scared about why is this interview focused on AI. So let's switch it back to financial education. You have a YouTube channel, PlugPortal, that's focused on financial education.
Yes.
So I want to know, our listeners would like to know, what gap were you trying to fill when you launched this YouTube channel?
Yes. Some of us are, we prefer the visual aspect of things to reading. Like you see some people prefer the physical copy of a book to the PDF. And that is what prompted me to start up that channel. And also, most times I'm on the internet, I see something new that can help someone. I want to put it out there for them to benefit from it as well. Like one of the videos I talked about how you can get cheap flight tickets. I spoke about that. I put it on the
Yeah,
website.
that's
So it's not
interesting.
just about finance. There are tools out there that can help you in living a frugal life, in saving money, in helping you out with your everyday thing. Um, if you save a few hundreds on a flight ticket, you can put that in your investing account as well. So it's not just mainly focused on that. I've talked about cars. There's a website where you can get car parts for cheap, and they're genuine parts. It will work with whatever the mechanic wants to sell to you. So it's all about people who want to see things instead of regular hearing it from the radio or reading it in the paper.
That's another aspect. I never thought about it that way. But now that you talked about it, yeah, it made a lot of sense to me now. In your view, what is the one thing most Nigerians misunderstand about building wealth?
I would say patience is just that we are always in a hurry as Nigerians. Even myself, it still happens to me. I am always in a hurry. Oh, I want to buy this stock for $1, and wait for it in 2 weeks and let it go to $13 or $15 and then cash out. It doesn't work like that. Warren Buffett didn't invest last year and just became a billionaire the following day. Same thing with Dangote. It started slowly, build slowly. And that's why I believe in that concept of cost averaging. That is, if you want to buy a stock with 100,000 naira, don't just put in everything and say, oh, today I'm buying First Bank 100,000 and that's it. And you go to sleep. No, you can buy it slowly. Don't be in a rush. Time in the market is what will really help you. When I started my position in First Bank, it was at 10 naira per share. And I have it there on Twitter. I posted it. I said, look, I'm going to start accumulating First Bank. I've done my research. I'm not buying everything at 10 naira straight away, but I'll start buying it at this price. And I started building that position gradually. Up till now, I can still buy for 25 naira or 30 naira. My average price will always be lesser than what the market is because I started gradually. I didn't just put in all my savings and say, oh, this Bitcoin stuff is going up. I'll just put in 100. No, you don't do that. And that is why we see some people gravitate towards Ponzi schemes because we're always in a hurry. We want quick returns. We want sharp returns. We want the biggest margins. Some people put in 10,000, they get 20,000, or they go borrow more and put in the 40,000. Also gambling as well. Those are two things that I've seen Nigerians or everybody gravitate towards because we want quick returns. But patience is very, very important in investing. In fact, it is the main thing besides your fundamental or your technical analysis.
Thank you. Now, there has been a lot of debate on this issue that most Nigerians, they are not financially educated. Even the ones that are academically, they are educated. Professors, doctors, nurses, just name it. They are not financially educated. And some people have said that the problem is we don't have any financial education in our curriculum, be it in the primary, secondary, or even at the tertiary level. Now, if you could add one financial subject to the Nigerian secondary school curriculum, what would it be?
There are actually three subjects that I would want to add. Number one is paying off debts. Number two is savings. And number three is investing. But if we are restricted to only one, it has to be savings. It is what is in between you being rich or you being poor. You need to learn the discipline that comes with savings before you can start your investment journey. And I've seen people skip it and just say, "Oh, I'll just start investing." If you have 100,000 or you have 100,000 debt and you invest that 100,000 cash that you have, if the debt collector comes, you liquidate that investment and pay. It makes no sense, right? So why not just pay off that debt first, then save, then invest? So it's just that simple. The discipline you get from savings is what will help you when it comes to investing. That discipline is very necessary. And I've seen a whole lot of people say, no, you can, if you have 100,000, just start investing. You don't need to pay off your debt. You can always pay it off later. But when you invest and it's not going your way and you have a debt, you see, you are still thinking of that debt. So it's still at the back of your mind. It will spoil that journey for you, that investment journey. It will detract you from, starting right and starting well. And another thing I would say in general is that when investing, just start from where you are. You don't need to start with 1 million or billions. If it's 5,000 you have in 3 months, just put it in there. Start with that.
Thank you. Thank you so much. I also believe in starting small. But most people, they have this erroneous belief that you have to be a millionaire before you can invest. And I think it's really drawing many people back from starting the journey of investing. So let's quickly do some quick fire round. What's the first stock you ever bought in your life? The very first stock?
First stock. It was not actually a stock that was my first investment. The first one was Nimet debentures, I could remember. And back then it was paper certificates.
Yeah.
So you don't need CSCS back then. So I did Nimet debenture. My first stock would be Japol Oil and Maritime. That was a big lesson for me as well. I learned a lot. So those are the two. I started with Nimet debentures. They eventually paid it back. And that was good lesson for me to get my feet wet in investing.
Okay. All right. That's interesting. So you were part of those those days when you have to walk down to your stockbroker, you give them what you want to buy, and you don't even know what is going on. Then they return.
You don't.
Good old days, yeah.
Good old days. It's better, way much better now.
Yeah. So new investors now, they are very lucky because they can do it from anywhere, any part of the world where they are. That's interesting. Now, the next quick fire question that I want to ask is the most underrated financial habit. What do you think is the most underrated financial habit?
Underrated, I would say, is research. People don't want to research anything. If I put it out there that First Bank is going to 100 naira because I have big followers, I'm almost certain people will buy because of that. Nobody's going to research why is this guy saying First Bank is going to go to this amount. I have people on there that there are two categories: fundamental researchers. They are there on Twitter. I follow them. Rufi is one of them, and there's one other guy that does technical. You look at the chart and it's telling you, based on this chart, this is where I think this stock is going. But if someone just writes pump and dump, First Bank is going to 100 naira. It's currently at maybe 25 or 30. Because I have 5,000 followers, some of them will just put in money into it. And so we don't research. You need to do your own due diligence. Even if everybody is selling a stock, find out why they are selling. Look at the fundamentals, look at the technical, look at the things that are not even in those two boxes. Does it match your investment style? Are you investing for the long term? There are some stocks that I hold that come what me, I'm not going to sell them because they are long term. It's not something I'm holding for 2 years or 3 years. But if anything happens like, the board is this or that I have to sell, I might sell. But for others, like Fidelity, I know people holding it for long term. When that issue came out, that is when they are even buying more. They are not bothered about any court case because they've done their research. But if you go with the flow all the time, then you probably have nothing left in your account. So the most underrated habit is research.
Okay. And then one book apart from yours, you think every young investor should read?
One book, I would say The Psychology of Money by Morgan Housel. It's a fundamental book. You can read it many times and it will still make the same meaning. You see different views each time you read it. It's still the same book, but different views each time you read it. It covers virtually everything you think you need in investing, in starting your journey.
Okay. So what's the best way for our listeners to connect with you, learn from you, or get your book?
I'm always on X, Twitter. You can tag me if you have questions. Get into my DM if you have questions, if you have anything bothering you related to investing. I'm always there to help people out.
So what's your Twitter's handle?
Tweets by Aloba.
Okay. And if they want to get your book, how would they get your book?
The book, for now, it's on Amazon. I'm still trying to write a bigger one, expatiated one, but this is just a small one related to using AI. And that's why it's not like the general ones that you see on Twitter where you have it everywhere. I have it on Amazon for now. I'm still looking to see ways I can get it into Nigeria for cheaper. It's just a download in PDF, and that's all you need. You don't really need the physical copy, and it's a small book, not too big. So I just have it on Amazon for now. You can check it out on Amazon.
Okay. If you had 30 seconds to leave a message for young Nigerians struggling to build wealth in today's economy, what would you say?
I would say keep investing, be inventive, be innovative. Make use of time. Time is your weapon. It is what would make you richer in the future. If you invest 10 naira now in a good company, be certain that 10 naira will turn to 20 at some point, turn to 30 at some point. So keep it simple. Don't go with the flow. Don't chase the shiny objects. There's barely no return on those type of things. And let patience be your weapon as well.
Thank you for that. And that brings us to the end of another powerful episode of the Nigerian Investor Podcast. A huge thank you to our guest, Mr. Babatunde Aloba, for sharing his wealth of experience from boardrooms in Nigeria and the US to the pages of his new book on AI-powered finance. We've covered a lot today: dividend and growth investing, financial red flags to watch out for, and how AI is reshaping the future of money. If you are serious about taking control of your financial journey, I strongly encourage you to check out his book and follow his content on PlugPortal as well as on Twitter. To our listeners, thank you for tuning in. Thank you for growing with us and for staying committed to becoming smarter investor. If you found value in today's conversation, please don't keep it to yourself. Subscribe to the Nigerian Investor Podcast. Subscribe to PlugPortal run by Mr. Aloba on YouTube as well. Until next time, stay invested. Bye for now. Thank you so much, Mr. Aloba.
Thank you too. I really appreciate it.
Thank you for listening to another episode of the favorite podcast that brings insight to the Nigerian stock market. We hope you enjoyed today's episode. To get more episodes like this, follow us on YouTube, Twitter, Facebook, Instagram, TikTok, Amazon Music, Apple Podcasts, Spotify Podcasts, as well as on our website. All this information is available in the show notes below this episode. Until we bring you another episode your way next week. Bye for now. TNI Podcast is executive produced by. This episode was edited by Rona at Rock Barry Village 2.